You have just 1 month left to make life-changing gains in crypto, is what a lot of people seem to believe. Today, we're going to take a look at the likelihood and probability of this happening, what it means for your altcoins, and why you should even care in the first place. So I have a tweet open here from TechDev52 stating that Bitcoin has just both opened and closed a week above the log 1618 Fibonacci level. And this is significant. Why? Well, in previous cycles of both 2013 and 2017, this has been a precursor to a parabolic rise in the Bitcoin price into the end of the year. Now, I must state that just because this has happened in the past doesn't necessarily mean that it's about to happen this time around, but in the event that it does, at least we're prepared and we can manage our risk accordingly. Now, this cycle is very different from previous cycles. At this point, that is a fact in both price structure, length, percentage gains, and the types of investors that we have in the environment this time around. We have institutional investors, we have yield-bearing assets, we have NFTs. These are all different ways that people can invest in cryptocurrency that might change the way that the cycles happen going forward. Now, perhaps Bitcoin cycles may remain the same in a similar structure, but we have other assets. We have Ethereum, we have thousands of altcoins, we have NFTs, all of these things that are bringing money into the ecosystem that don't necessarily mean that they're about to leave in the same way that they did in previous cycles. We have ways for people to exit that are different from previous cycles. Perhaps people are selling into stablecoins for a way to easily redeploy back into other assets, maybe even buying NFTs, maybe even buying other altcoins that are about to launch that haven't launched yet. The way that money moves and capital moves in this market is very different to the way that it has moved in previous cycles. In previous cycles, we had the regular pumps from Bitcoin to large caps to mid caps to low caps and repeat. And this is because profits siphon down through the size of market caps. And that is because the smaller the cryptocurrency, the easier its market cap is moved and the larger the percentage gains are. But this cycle, we've seen something slightly different. We've seen large caps pump with NFTs. We've seen small caps pump with Bitcoin. There isn't necessarily a perfect correlation that we can see this time around, and that is perfectly fine. It means that the market is maturing, the asset class is maturing, and we're seeing investment move in a more strategic and natural organic way. Organic in a way that perhaps there's still slight room for manipulation considering the size of the market. Now, another tweet from TechDev states that the accuracy of the linear 5618 Fibonacci level has been accurate in calling the Bitcoin tops around 98% of the time, and it calls for a top of around $230,000 this Bitcoin cycle. Now, this competes with a lot of different models and a lot of different analysts because why? We have tons of different models, and models are simply models. It does not necessarily mean that this is exactly what is going to happen. And in order for us to understand and predict what's going to happen, we need to take into account a variety of different models, a variety of different opinions, and you need to be able to hold those different opinions in your mind at the same time without getting emotionally attached to one of them to understand the market better and get a more holistic understanding of where the market could go, where your risk lies, and where you look to put your investments. Now, this could be accurate. We could see a peak of $230,000 this Bitcoin cycle. But if we take a look at the logarithmic regression bands on Bitcoin, which was made popular by Ben Cohen, another very popular YouTube channel, which I admire and respect, an intelligent individual, and if you haven't checked him out yet, I suggest that you do. Now, in his analysis, he states that, of course, Bitcoin is going to respect the logarithmic regression bands, right? And if it does that, of course, we will see a peak of around $150,000 because that is the upper limit of the logarithmic regression band as we head into the end of the year. At the end of December, that is where the peak of Bitcoin could be. Now, if we respect TechDev's idea and say that Bitcoin heads to $230,000, we are far extending above the upper end of the logarithmic regression band. But there are varying opinions as well. Another popular analysis made by TechDev is the weekly RSI. And as you can see, we've been in a downtrend on the weekly RSI since the beginning of Bitcoin's inception. And every time we have touched this trend line of the peak of the RSI, of the weekly RSI, it has blocked a top for Bitcoin. So both in 2013, 2017, and 2020. These have marked the peaks that we've had so far. And we did technically have a peak earlier this year. It may have been a rounded peak. There are varying factors as to why this happened. We have more leverage in the market. We have institutional investors. We have long-term holders that believe in the future of Bitcoin. So we have this sort of rollover effect in the peak of Bitcoin price. Now, maybe something similar happens this time around and we don't have a blow-off top in towards the end of the year. We have the slow rounded peak around $150,000. Who knows? Maybe it does go all the way to $230,000 and we see a slow rounded peak. Do I know? Do you know? Do they know? No. All we can do is try and hope for the best. Look at what we have, look at the tools that we have, and try and predict what is about to happen. Now, if we do pay attention to this, and we do have a peak into the end of the year, we could see a peak around $150,000 to $160,000, where the peak of the weekly RSI touches this trend line and gets rejected. Now, the RSI isn't necessarily the only thing that we need to pay attention of, right? Overbought, oversold. The RSI can remain in this territory for a very long period of time, no matter which asset you're looking at, especially in Bitcoin, especially in crypto, where the assets are incredibly volatile and can remain oversold and overspeculated on for an extended period of time. So maybe we don't get typically rejected in the way that we did here. And we do see something similar to this of 2017, where we did almost touch the trend line, basically touch it, and remain in this sort of oversold region for an extended period of time and have this parabolic rise up. And if we do see something like that and we touch it multiple times, maybe we do see a rise further up than we expect. But whatever the case is, whatever happens for Bitcoin, you need to be prepared. Because I see a lot of new investors entering the space towards the end of the year. Because what causes these parabolic rise, what causes this FOMO hype? It's retail investors, investors like you and I, investors on the street, people who have just recently heard about cryptocurrency and maybe taken the first step or the first leap into investing into crypto. These are the investors that push the price up to these parabolic prices because they aren't looking at the indicators that we're looking at. They aren't looking at the analysis and the models that are made popular online. And even the more sophisticated investors, which are technically institutional investors who have a lot more sophisticated tools than you and I do at analyzing the price of these Bitcoins, and they're looking to take profits on those retail investors. Because retail hype and FOMO is something unlike we've ever seen before in any industry, right? Retail hype is what drives most of this irrational behavior, irrational growth in the market, because they are investing in a way that isn't very sophisticated. If you log into your Coinbase app and you see Bitcoin's gone up 50%, you're like, damn, maybe it's going to go up another 50%. You hit buy, you go on about with the rest of your day, and you come back 3 months later and you're down 80%. You aren't monitoring the charts like the more sophisticated investors. I'm not talking about you directly, but I'm talking about the retail investor. So there's very many things that are different this market round, right? And one thing that I want to make very, very clear is this data, that I'm presenting to you right now, is something that I'm presenting to you. TechDev is presenting something different. Ben Cohen is presenting something different. There's tons of different analysts out there who are presenting data to the public, to the masses. These videos are getting thousands, hundreds of thousands, some of them millions of views. And this can possibly lead to a self-fulfilling prophecy, right? If many people are expecting the same thing, maybe that thing will happen. But it can also happen in the opposite direction, meaning that so many people are expecting this to happen, so they try and strategize and take profits on the way up, take profits before we do reach this peak, because they are managing their risk accurately. So there's a lot of game theory that comes into this as to when the top of the market is. Do we care? No, you shouldn't care. You should manage your risk accordingly. Take profits if you can. Take profits where your risk appetite is. If you're investing a large sum of your wealth into this and it's going to hurt you if you lose that money, be more risk off. Be more risk averse. Take profits accordingly and move it into a portfolio. Like I've said in previous videos, if you haven't yet seen the previous videos, go take a look at them and you'll get a better idea of how I manage my portfolio and how I structure my investments, so that if I do lose all of the money that I'm trading with, it's not going to affect me one little bit. It may suck a little bit, but it's not going to affect me, affect my livelihood, affect my health and my family. That's not going to happen at all. So if you do want more of this analysis, if you want to see some of the stuff that I tweet and retweet and where I'm getting this data from, go ahead and follow me on Twitter. Close to 200,000 followers right now. There's tons of scammers out there, so please let's push this number up because my Twitter is vastly underperforming my YouTube channel numbers. So if you haven't yet, please go ahead and follow me there. I do tweet some stuff, I ask some questions, and maybe occasional memes. Let's take a look at another opinion, right? Let's take a look at diminishing returns, lengthening cycles, another very popular idea. And this is a tweet by Jordan Lindsay, with an authentic look at if the cycle is experiencing diminishing returns. It's logical when comparing 2012 to 2016 cycles to note that the diminishing returns took place. So let's take a look at what's happening. How do we define a market cycle for Bitcoin? Arguably, it's from halving to halving. Before that, the price doesn't really matter because we're talking about actual defined cycles. So now that we have that definition, let's take a look at what has happened. So from 2012, the cycle outperformed 2016 when measured from halving to mid-cycle low. 2012, 414%, 2016, 184%. Diminishing returns. In 2020, the cycle outperformed 2016 when measured from halving to mid-cycle low. So 2016, 184%, as we just saw, but 2020, 241%. So an evidence of non-diminishing returns. Measured from the halving to today's date, November 14th, 2016 is outperforming 2020. Diminishing returns. In 2012, the cycle saw a gain of 1,600% from mid-cycle low to peak. This is a 4x. The 2016 cycle saw a gain of 859% from the mid-cycle low to peak. This is roughly a 4.5x. Allow me to speculate, being a speculator if you will, says Jordan Lindsay. If the 2020 cycle saw roughly a 4x from its gain from halving to mid-cycle, as both previous cycles have seen at least a 4x, that would place the potential cycle peak at $315,000. It's interesting to note that to date, all three cycles have made their mid-cycle low in July, the year after their halving. It is possible, rather than experiencing lengthening bull markets, no matter when the halving occurs, that the following year in July, the mid-cycle low takes place. This would explain why cycles appear longer, as each halving thus has occurred earlier than the previous year before the halving. So now that we've got three varying price targets for Bitcoin, 231,000, 315,000, and 150,000. So what do? We don't look too high. We don't look to squeeze the very last bit out of this market. I've said this many times. There are tons of ways to make money in this market other than simply by speculating on the market. By being an active participant in DeFi, in crypto, in NFTs, you have ways to maximize your wealth in a way that doesn't allow you to take on too much risk, right? So let's say you have a price target of $150,000 for Bitcoin. Bring that down by 40%, right? You could exit the market right now and gain in 20% yield per year using Anchor Protocol, something on Terra, by staking your UST, a stablecoin, meaning you could exit all crypto right now, stake your UST on Anchor, earn 20% yield per annum, and you would be at the same price now without taking on that additional risk. These are some of the strategies that you can use to make the same amount of gains with mostly diminished risk in a way that allows you to watch the cycle as it goes. Maybe things change. Again, these are predictions, predicting what's going to happen in the future, but we can analyze day by day. We look at the market every day. We look at the structure of the market every single day. And that way we can get a better idea of what is happening in the future. You don't have to know exactly right now what's going to happen in a month from now. You don't need to know exactly right now what's going to happen in a year from now. When that time comes, or leading up to that time, you can then adjust your risk, adjust your investment strategy as you're moving into those periods of time. And we can look at what the market looks like, what the sentiment is like, what investment's like, where the capital is moving at that exact moment, and adjust accordingly. Now, let's take a look at why the cycle is different from previous cycles. What are we looking at? What are the major differences this time around? Well, Russian deputy proposes a bill to legalize Bitcoin mining and forms a working group, right? We have countries legalizing Bitcoin as tender. We have countries legalizing Bitcoin mining and making it a large part of their investment strategy for the country itself, for the country's GDP. There's ways that huge institutional investors, huge investment is coming to the space that is completely different from previous cycles, right? And these investors, these sophisticated investors, as people would call them, with tons and tons of money, aren't looking to take on outsized risk, right? We have the inflation narrative this time around. That is what Bitcoin's doing. It's a store of value. It's protecting you. It's a hedge against inflation. These narratives all play a role in how far Bitcoin goes, whether we do have a market cycle peak, whether we do have a parabolic rise into the end of the year, or we do have this sort of prolonged growth, as we've seen in the stock market with something like the S&P 500 that's just basically been up and to the right since the beginning of time. So there are varying different things that are coming to the market this time around that make the cycle extended. There's things that we're looking at. For example, if we look at ethereum, we have ETH 2.0 coming out possibly mid-2022. Now, are we going to see a market cycle peak before that? Possibly not. We did see altcoins peak slightly later than Bitcoin in 2017, but it doesn't mean that that's going to happen this time around. Maybe altcoins peak at the same time as Bitcoin. Maybe altcoins don't peak and they also continue to gain more and more investment from institutional investors. We see funds like Grayscale adding altcoins to the fund, which could bring investment not directly through Bitcoin, not profits being moved from Bitcoin into altcoins, into Ethereum, but investment going directly into those altcoins themselves. There are huge funds that are investing in seed rounds, VCs that are investing in crypto directly without going through Bitcoin first. So it means that we're getting more educated investors into the space, and we're seeing the money being held and not looking to take profits back into fiat, because the idea that fiat is trash is becoming more and more popular, and people are starting to finally understand this. We have China possibly reversing its Bitcoin mining ban. Now, you would have remembered that the China FUD has been very popular since the beginning of time, since the beginning of Bitcoin, that every time China bans Bitcoin, we see a dump because it could possibly end Bitcoin. If Bitcoin's hash rate drops below 50%, we're going to see a huge dump in Bitcoin. It's going to be the end of Bitcoin. But China has quickly realized that by banning Bitcoin mining, Bitcoin is here to stay, that mining moved somewhere else, and the hash rate has quickly recovered back to levels that it was prior to the ban. Now, China is regretting this. Why? Because they're losing out on money. They're losing out on profit here. There's a lot to be said around the so-called green narrative around crypto, if that is even a thing that matters at this point. Because the world is profit-driven. The world is a capitalist society. We're looking for ways to have the most money that is possibly available to us. And that is what these countries are realizing. So China could potentially reverse a ban on Bitcoin mining. Why? Because they want to attract that investment. They want to be the world superpower. This is a competition, right? The world is competing with who is the biggest, who has the biggest head, who has the biggest balls, who cares, right? But we need to understand what is happening behind the scenes and why we're investing in the things that we're investing in to protect ourselves against the major superpowers of the world that are looking to destroy us. Now, let's take a look at NFTs. I mentioned earlier that NFTs are bringing a lot of investment into the space, and the CEO of Coinbase says that NFTs could be as big or even bigger than all of crypto. And I completely believe this, because if you aren't in the echo chamber of crypto, if you aren't on Twitter all day, if you aren't browsing the interweb, if you aren't watching YouTube videos all day surrounded by crypto, and you go out into the real world, you'll notice that crypto at this point is pretty much nowhere. Like, no one really talks about crypto that much unless you're talking about people who are interested in it already. It's a very small percentage of the world who are actively using crypto. However, I speak to people who own NFTs, know about NFTs, are investing in NFTs and speculating on NFTs that pretty much have zero idea about crypto. They have no idea what crypto is. And we are getting to the point, as I've said many times before, that when crypto true mass adoption takes place, it will be at the point where you don't know that you're using cryptocurrency. When you're using the internet, you're using a browser, you don't know jack shit about HTTP, you don't know anything about TCP, you don't know anything about the protocols going on behind the internet, because it's not in your interest to know that. You don't need to know that. You don't need to know how the oil and the engine of your car works in order for you to drive a car. You just know that it does work and you use it. Now we're getting to the point where apps and companies and businesses are starting to implement crypto and blockchain on the back end without the end user even knowing about it at all. And NFTs have been the perfect example of this. Ownership has been brought back to the digital age. People are using NFTs and owning them because why? They like owning things. Most people who are investing in crypto have an emotional attachment to their NFTs. As they see an NFT, they see, oh, cool, this is awesome. That's why celebrities are buying this. The hype culture around ownership is coming back to the digital age, and that's bringing with it NFTs. And that's why I truly, completely agree with what the CEO of Coinbase says, that NFTs could be entirely bigger than all of crypto that we see right now, because it is very much on that path, because you don't need to be involved or even know about crypto in order to understand NFTs and understand digital or even ownership in the first place. Heading back to the previous point of countries realizing that investment in crypto is very important, we have the Miami mayor stating that Miami could start paying Bitcoin dividends to residents that open crypto wallets. We're going to be the first city in America to give Bitcoin yield as dividends directly to residents. Now, this is a shift in narrative from what we had many years ago, where anyone involving in Bitcoin or investing in Bitcoin was a scammer or used for illicit activities and money laundering and so on. This narrative is shifting, right? This is shifting because Bitcoin is the people's money. And if you want the people's respect, if you want the people's support, what do? You shift your narrative to support that. So we see these mayors and we see presidents trying to one-up one another to gain the popularity and gain the respect of the public, of the retail investor. They show that they're supporting Bitcoin. They show that they're supporting the people's money. What are they going to do? They're going to gain the most votes. They're going to gain the most, basically draw towards them, and they're going to win, and they're going to basically improve their case. So they are understanding. We are seeing this change in narrative that Bitcoin and crypto is no longer this weird, scary asset class that everybody's afraid of. It's in fact the best form of money, the best investment, the future of the world as we know it. We've seen Facebook change its name to Meta. We've seen the metaverse pop up now. People are starting to understand that the metaverse is a place and a time that is very, very near around the future, which again, I'll make a video on the metaverse very soon, explaining exactly what my thoughts on that are. So stay tuned for that. If you haven't yet, hit the subscribe button, hit the like button if you've liked this video so far. There's been a lot of talking in this video. I hope you guys are liking this. So let's take a look at Bitcoin then in terms of the technicals, on the on-chain analysis, not necessarily purely speculating. Let's see what's happening with the coins right now. Coins older than 3 months are at an all-time low, meaning that the Bitcoin illiquid supply is at the highest it's ever been. So that means that people are buying Bitcoin and holding it. Exactly what I've just said. They're trying to protect their wealth. They're buying Bitcoin, they're taking it off of exchanges, and they're holding it. They're not looking to sell it. They're not looking to take short-term profits into fiat. They're holding it because they know that it's going to appreciate in value against fiat, right? So holding Bitcoin, the narrative against holding Bitcoin has changed. It's now one of the most important assets that we could ever have. It's something that people want. And what does this mean? It drives up the price astronomically. The less Bitcoin there is on exchanges, the lower the supply is, the easier for the Bitcoin price to move up in value is, because it takes less and less investment to move into the liquid coins that are available on exchanges. And this is all about supply and demand. The less supply there is, the higher the price is going to drive up, because no one's willing to let go of their Bitcoin. So the price per Bitcoin goes up very, very quickly since less and less people are selling. Of course, we have Bitcoin's taproot upgrade. Again, another advancement that I've said I equate to, let's say, Ethereum's EIP 1559 and ETH 2.0. These are all large events that are coming to cryptocurrencies that many people are awaiting, right? These are things that allow for the future development and advancement of Bitcoin and Ethereum and all these cryptos. It allows added functionality, added improved scalability, improved privacy. These are all things that come to crypto with these upgrades that people could be anticipating that could, again, lengthen or extend the cycle. Let's say we have an extension into 2022 because people are waiting for ETH 2.0 and ETH 2.0 drops, and people who have staked the ETH up until that point start selling dramatically, and that causes a cascading in price and cascade of liquidations, and people start selling out. Maybe we see a peak later into 2022. We didn't necessarily see that with Bitcoin's taproot upgrade because, of course, it's a completely different narrative. But what I'm saying is that we have these large events. We have more and more events coming up in the future, more things that people are looking forward to. And as we know, if you want to drive hype, you prolong, the dates move out into the future, these milestones move out, and people are waiting in anticipation because the final event, no matter how big it is, this is why sell the news, buy the rumor and sell the news works so well, is because no matter how big the hype is, no matter how much you talk about it before the event that actually takes place, that event never truly lives up to the hype of the investor or the people who are waiting for it. There will always be a dump because there is somebody looking to take profit and capitalize or on that hype that's led up to that time. Now, another thing I want to talk about here is the 4% of Americans who have profited from crypto investing have quit their jobs. Now, this is an insane number to think about, that crypto gave these people a reason not to work. 4% of US residents have resigned from their jobs over the past 12 months as they have made sufficient profits from crypto. And interesting, the majority of these were low-paid workers with annual salaries of less than $50,000. So 4% of people have quit their jobs from crypto gains so far. Now, this isn't necessarily a very good stat. I don't think this is very good at all, because what do you do once you've made, let's say, $50,000 in crypto? You need to look to the future. And I've spoken about this many times before on this channel with regards to financial freedom and becoming wealthy, right? Financial freedom means that you get to do whatever you want to do every single day. You don't have to answer to a boss. You don't have to care about what they're saying. You don't have to slave away in front of a computer screen all day for someone other than yourself. Now, $50,000 in the US isn't necessarily a lot of money to provide financial freedom for an extended period of time. I've always said that the best way to figure out how to manage your life accordingly and how to figure out what you do is to extend that period of financial freedom, extend that timeline. How long can you go without working for somebody else? Whether that's 6 months, 1 year, 2 years, 5 years, 10 years, the longer you can extend that timeline, the longer you'll have to be able to figure out what you want to do for yourself, how you can make what you're doing work, and perhaps build on things that are more fulfilling to you than trying to build somebody else's pocket, right? So this 4% of Americans who've quit their jobs from crypto gains might be a very short-sighted thing. And if you are looking to make this newfound wealth in crypto, and that's why I spoke about the end of the video, if you're trying to squeeze every last bit out of this market towards the end of this year, don't try and do that. Look at the long term. Look if you can become financially free within the next 2 to 5 years. If you can make, let's say, an extra 50% of your money, maybe you can double your money by the end of the year, and you're happy with that, exit the market, earn yield on that until the next bull run, enter earlier, because at this point you are quite late. Enter earlier, make more gain, and then think further down the line. You can be financially free maybe by the next bull run. Your timeline can always be extended if you want to minimize your risk. And finally, of course, we have Bitcoin percent on exchanges, just as I spoke about earlier, Bitcoin's liquid supply, and that's it for today's video. If you made it all the way to the end of this video, please comment down below rainbow donuts. And I thank you guys so much for watching. If you liked the video, please give it a like, hit the subscribe button if you want to see more videos like this in the future. And as always, I shall see you in the next video. Cheers.